We are live. Hi, Todd.
Hi, Rich.
Hi. So I wanted to introduce myself to the clients of ours and people that follow Spokane Home Guy Group that don't know who I am. My name is Rich Prasser. I'm the CEO of the Spokane Home Guy Group, One Property Network, and our investment/build company, OPN Capital. And I am joined today by Todd Phenneger. Todd is with Catalyst Lending Team, and Todd, I'll turn it over for you to introduce yourself.
Hey, my name's Todd Phenneger. I am the branch manager for the Catalyst Lending Team at Celebrity Home Loans. I've been in the business for about 8 years now and really enjoy what I do. So thanks for having me, Rich.
Yeah, and we've had a great partnership with you over the last 5 or 6 years and working with us and our agents and our clients and providing a high level of service. So I'm excited to have a conversation with you today about what is happening with interest rates. We'll go over the real estate market, go over a couple of cost of waiting scenarios, and then we're going to finish it off with how can we make real estate more affordable right now, regardless of what interest rates are doing. So why don't you kick it off, Todd? And like I've heard a lot, and I'm obviously a realtor, but we've heard a lot about like how high rates are right now. So what have they done over the last 3 to 6 months?
Yeah, so at the beginning of the year, rates had gone up slightly from their all-time low, but we were sitting at around 3%, and we're currently sitting in the high 5 to low 6% range, depending on the individual buyers, their credit scores, and which loan product we are talking about.
Yeah, so almost doubled since the beginning of the year.
Yes, and those increased rates do put a little bit of stress on buyers because it does reduce their buying power.
Yeah. So the other thing I've been hearing about, and there's a lot of noise in the market with what's happening with Ukraine, what's happening with gosh, you name it, and there's something, it seems like something negative is happening. So with rates going up, does this mean that the home values are going to drop?
No, not, almost all of the analysts that do believe that rates will continue to go up. They're not going to go up at the rate that we've seen. Home values last year went up over 18%. Higher in some markets, lower in others, but in Spokane it was around 18. And that's not a sustainable number. That was the anomaly. We will see rates or your appreciation rates go back down to more normal levels of probably 4 to 6, maybe 7% per year. We still have a massive shortage of homes in America. Depending on the numbers that you trust, between $3 and $5 million home shortage. At the peak of building in 2006, builders were building about 1.6 million homes a year. Currently, they're building about 1.2 and are not really able to build more due to supply shortages.
Yeah.
So they're barely keeping up with demand right now because there's about 1.2 million new homeowners entering the market every year. And so if we were able to ramp up to that 1.6 number, which is the highest that we've ever been at, it would still take 5 to 8 years just to catch up with the current shortage of homes in America. And Spokane, I think, is even hit harder because it's such a desirable area to live. There's a lot of people moving here, moving out of other areas.
Yeah, and it's kind of been an interesting real estate market to start off the year, especially over the last 3 months or so with what interest rates have done. But if we look at just a quick snapshot of the Spokane market, we're still sitting at roughly a 51% pending ratio. So roughly 1 out of 2 or half the homes are pending out there. We've seen inventory nearly double since the beginning of the year. And if we look at that, like we're still looking at a really strong seller's market. A balanced market is somewhere in the neighborhood of 5 to 7 months of inventory that's on the market. And right now we're sitting at 2 to 2.5, depending, any given day when you look at it. So still a very much like inventory challenged market. And affordability has just really become very much a pain point right now with interest rates and
Mhm.
having seen a massive price appreciation over the last, 5, 6, maybe 7 years. So Todd, like when we're talking with people about waiting, like let's wait and see what rates do, or let's wait and see what pricing does. Like what advice are you giving people, and what are you seeing with regards like to the cost of waiting to purchase?
Yeah, that's a great question, Rich. So, you know, the the projections are that home values are still going to go up, and so your cost of waiting, like for instance, if someone the median home price in Spokane right now is about 450,000, I think. The so if for your average home buyer buying that median home, that your cost to wait to buy for 1 year is about $28,000. Now that's assuming an average increase of value of about 6.6%. So that's much lower than it was last year. It's probably what we're tracking for this year. That's $28,000 that someone is leaving on the table, that they'd either have to come up with additional down to try to keep that payment the same. People tend to focus on just the rate, like, oh my gosh, my payment. Well, it's not really about the payment. It's about how much equity can that property get you. You can always refinance that loan later back to a lower interest rate. When rates someday go back down, which we do think will happen in a couple of years, you can refinance that, but you're going to be refinancing that at the lower purchase price that you purchased at versus buying it at $50,000 to $100,000 more.
Yeah, yeah. So what I hear you saying is like the cost of waiting is actually costing somebody. It's costing a homeowner. And you and I were talking, and the average rent in Spokane right now is at or just a little above $2,000 a month.
Mhm.
And the average, mortgage on a, $300,000 home is $2,300. $300 difference is a lot, but I think you said within 3 years, the cost of rent is going to catch up to that mortgage payment. And by the way, like you haven't earned any equity in the house.
Right. And using that same metric, so a $300,000 home at $2,300 a month, you're locking in that payment. Well, after 9 years, again, assuming a fairly conservative 6% per year, that buyer would be sitting on about $163,000 of equity. So, like, why wouldn't you have to pay for housing regardless, whether you're renting or you're
Yeah.
buying. Why wouldn't you invest in something that's actually going to pay you back for that?
Yeah, potentially changes, or could very much impact your future. I mean, $160,000 is quite a bit of money that could do some good.
Yeah.
So I wanted to
And
wrap up our call with, affordability, higher interest rates, higher prices seem to be one of the biggest pain points in our market. And as a matter of fact, it's just absolutely stopping people in their tracks from making a decision to be a homeowner. So what would be like one of the number one things that somebody could do to make housing more affordable right now?
I think the biggest thing is just for people to work on their credit, obviously, because a better credit score always helps. But there are some things that can be done. As the market does shift and some homes do sit on the market a little bit longer, there is a little bit more room on some homes to potentially maybe get some seller paid costs to help buy that rate down a little bit, instead of going with the highest rate on that is available. Being able to, if you can buy that rate down 0.5%, that's equivalent to maybe getting that home for $10,000 to $15,000 less.
Yeah.
So that's one thing, but the biggest thing is just to work on credit. And I think just to make that step to get into a home. One thing a lot of people also forget to take into account is when you own a home, that's a massive tax deduction. And so you might be paying slightly more than you would renting, but you may get some or all of that back come tax season too.
Yeah.
Everybody's tax situation is different, but
Yeah. So if I can just kind of recap our conversation today, the cost of waiting is expensive. We calculated that out to be about $163,000 over a 9-year period, which, by the way, is faster than the savings rates that most people have on an annual basis over that same 9 to 10 years. Affordability. A couple of the best ways: number one, work on your credit. Obviously, the higher the credit score, the better the rate that you get. Number two, and if you remember from the quick market summary, 50% of the homes that are out there are not pending right now. So whether it's a price reduction to make it more affordable, or potentially negotiating some seller concessions towards buying down the rate, can absolutely make your home more affordable, by 0.5% to 1%, which is a massive difference in the monthly payment. And that's kind of what we're after in our market right now, is making homes more affordable. So I appreciate you guys for watching. Again, my name's Rich. I'm the CEO of the Spokane Home Guy Group, One Property Network, and OPN Capital. Todd Phenneger, the branch manager of Catalyst Lending Team. We look forward to putting more of these out for you to hopefully help you navigate this competitive market. Take care for now.
Thank you.